Crypto. All the crypto news in one place.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item.
This week has been such a win for crypto when it comes to crypto policy. I can't even begin to tell you. I mean, we had Solana announce an XRP partnership. Well, it was kind of a partnership, but not necessarily a partnership. Great, fine, fantastic. With essentially making a wrapped XRP available multi-chain. Then in addition to that, we had the SEC came out and says, we don't want to classify ICOs as securities. We just want to deal with tokenized securities. So we're going to go ahead and pass that to the CFTC. Then the CFTC came out and said, hey, we are going to, we're going to withdraw a lot of these outdated crypto rules.
Let's talk Wall Street adoption. Let's talk HBAR ETF. The HBAR ETF means boomer capital can finally flow into HBAR. HBAR was the third ever crypto to launch a spot ETF in the US, only after Bitcoin and Ethereum. Another example showing Hedera is the institutional favorite. The first HBAR ETF is now live on Vanguard, the 11 trillion plus investment firm with 50 million plus customers. Boomers discovering the Hedera Council now have a direct way of getting exposure. And there are 12 plus other ETFs filed that include Hedera, from Grayscale, Rex, Canary, 21 Shares, ProShares, and so much more. Like I said, HBAR is interested in working with institutions. Institutions are interested in working with HBAR.
There are a great number of reasons to believe that Bitcoin is being suppressed right now. There are a lot of covered call options that are just triggering major sell pressure on Bitcoin. You have a great amount of FUD. You have a lot of institutions that are desperate for Bitcoin to go down to $69,000 to $75,000. Not so much even to trigger the liquidations, but more so because they want to fill their own bags. There are a lot of people sitting on the sidelines right now hoping and praying that Bitcoin's going to go down to $60,000 to $70,000 because they want to buy down there. They even want to buy down there on leverage on like 1.3, 1.5, 2x leverage because they understand that in 2 to 3 years, with the way the market is going, with Bitcoin being allowed to be collateral from just about every single bank, with Bitcoin being rapidly accumulated by institutions the world over, governments, state governments, federal governments.
Number 3, Hedera Council member Aberdeen launched a UK first with Lloyds Bank. They're leveraging RWAs on Hedera as collateral for foreign exchange. Number 4, EDF Energy, France's state-owned energy company, has built multiple sustainability use cases on Hedera. Number 5, Standard Bank, Africa's largest bank, and Shinhan Bank, South Korea's oldest bank, have both launched multiple stablecoin pilots on Hedera.
If you've been following the markets recently, you've probably heard the same message repeated over and over again. Liquidity is coming back.
Liquidity.
Interest rates have been coming down. In the last 4 months, we've seen 3 cuts, and more cuts are expected into next year. Policy is getting easier. In fact, this week, the Fed just announced a new stealth QE program. It's called the RMP. And on paper, that should be positive for risk assets. But when you look at crypto, especially alts, the reaction just hasn't been there. Most tokens are still down, participation is thin, and people haven't returned to the space in any meaningful way. Yeah, it's going to end up in here. It's going to end up as another tool that the Fed can use to add or subtract liquidity from the market. And between these 3 tools that they've currently got and this 4th one that they are now implementing again with this RMP, if you've forgotten what that is, don't forget, it's just this new tool that they've got, reverse management purchases, and it's basically just QE lite, right? So when this chart is going up, and when it's above this 0 line down here, it means the price of oil year on year is increasing. As it drops down, or maybe even goes beneath the 0 line, it means the price on oil is declining, making essentially demand on goods and services cheaper. As the price of oil increases, this is a textbook barometer for the economy is expanding, or there's more demand in the economy, because oil is the essential ingredient for any economy at the moment, because it basically is a proxy for energy, right?
Today for the Bitcoin price, ladies and gentlemen, we need to talk. We need to talk about Bitcoin. Bitcoin is right now, here on this Sunday, at a crucial support I've been talking about for some time. And the next big move is actually much more imminent than we might believe.
A big thing that we need to look out today is the trading range that Bitcoin is sitting in here between about $89,000 and $94,000. This trading range is built by the major level of resistance at approximately $94,000. That is built off of the 0.618 Fibonacci.
And that brings us to this chart I'm watching very closely right now. Okay, now this is a chart I've shown you multiple times, and it's a chart of the Purchasers Manufacturing Index, the PMI, against Bitcoin. And the PMI, very simply, is a broad barometer of how the US economy is doing, right? It's a measurement that asks individual companies, hey, are you doing better or worse than last month? If they do better than last month, then they get a score of 50 or more, which means that particular company is expanding. If they're doing worse than last month, that particular company gets a score of less than 50. This white line here is the 50 line, and you can see on average, this is all the companies, their data is collected. If the majority of companies are shrinking or contracting, the PMI is going to be less than 50.
We still have that level of liquidity towards the upside sitting at around 94.7k, but just over the last 1 to 2 days, just in the imminent short term here, we've now started to build some more liquidity just below the price of Bitcoin, sitting at very close to 89,000, slightly below 89,000. So really in between around 88.9k to 89,000. That is a potential price target in the immediate short term for the price of Bitcoin.
There's been exceedingly low volume, which is not in exactly a bullish sign that Bitcoin's going to try and rally up to 100. And it's very obvious to see that very low volume because on New York Open, you have seen these massive movements over the last couple of weeks where Bitcoin just kind of Bart Simpsons around. You've probably seen the memes of like all the Bart Simpsons and inverse Bart Simpsons that we've seen on the chart.
See how we have a gap in volume in between, I'd say 91 to 90k, all the way lower to 87k, and that was actually one of the main reasons why we were predicting actually a drop and a bounce a couple of times on Bitcoin for the past month. We literally had seen this bounce or drop, as you can see, and then once we had gotten above 87, we saw an easy pump to 90k, 91, also this time, and also this one here and there.
So, did you enjoy the app? Let me know in the comments.